This is Justin AMZN for Thursday, January 10th, 2019. Today's candle, so this is today, this rally from down here really reminded me of the rally we had down here. Moved up, pulled back a little bit, moved up some more, pulled back, just chopped around. And that's really what we had today. We didn't have as much of a pullback right here. Actually, there was probably some folks that are looking to get in bearish as this, anticipating this rolling over, coming right back into the open high. And I looked at it at this point, it's like, it's not going, it's at a good pivot because of the wicks here and the low here, but there's not a line here saying, hey, that's a great place to get in bearish. It should hold that resistance. So like, no, I'll just wait. And I'm really glad I didn't trade it because it just rallied out of there, continued on bullish, put in this triangle, looked like that was going to break out, didn't even get up to 1665 before it rolled over and pulled back down kind of into that same range and then rallied back up, which again is similar to what it did 2 days ago, where it pulled back, rallied up again. So a lot of similarities. Excuse me. Overall, this is a pullback, still kind of a pullback, kind of pennant kind of day. You can kind of connect the highs here. Oops, there you go. Kind of like this. Some, this high, some pre-market, the highs in here, the high here. Probably draw it a little tighter, actually. It looks like it's a little bit off. There you go. So that's what we're kind of following. And so back over on the daily, we're still right at the top of this downtrend channel. This is the line I just drew on the 5-minute showing. Yeah, we're kind of making a bit of a pennant here. If you connect the top, maybe connect the bottom, see what happens there. If I zoom out a little bit, you can see the angle on that. Let me see if I can, let me think for a sec. I think there's a way I can duplicate this. I have to double or just click it and then to duplicate. Okay, now I'm going to switch the values. Come on. No, it doesn't want to let me do that. Not working. Let me see if I can type something. No, it's not working for me to type it. What I would do is switch these values and keep the time the same, and that would give me the inverse of this, showing an uptrend with that kind of angle. Instead, I need to draw it, so I'm just going to kind of draw a little bit, something like that. So it kind of matches. Matches the top, downtrend. This is uptrend here, or sorry, the triangle to match the up, as if there were an uptrend. But all I do is draw it to here. There's not any other point it's connecting to. So, not a symmetric triangle forming here. It just kind of suggests more of a pennant, a little bit of a pullback. And, still really does, look nicely bullish. Just having these two rallies off of the lows down here would have been great to get into this price today. Didn't happen. The actual candle opened below yesterday's close. And so it's a bearish gap and go. And it did go down bearish. And then rallied. So, I mean, this was a really large opening candle. It could have taken the trade bearish here with a stop here or here, but likely would have been stopped out or trailed out potentially if you had, moved to stop aggressively along with this move down. It just didn't work as a bearish gap and go. So part of that is why I'm thinking it looks much more bullish, because it just wouldn't hold a bearish gap and go. So you know what? Let's leave this on here. Extend to the right. There you go. Let's leave this on here. See if we can come and bump into it again tomorrow, or see if we can get through it tomorrow, and kind of see what happens. Um, looking at just the day here, because it didn't get into this line down here, it was harder to buy at this level. Other than getting a breakout above some of these candles, tightening up a stop when this happened, and then exiting, potentially exiting up here, near this line, or potentially exiting, after this one sideways. So that would have been getting into calls down here. So looking at the calls, this is the 1675 call. What's nice about this is a breakout would have been at $4, and a stop could have been at 3. And because you would have been filled on this candle, likely filled on this candle at 4, it never came back down to 3, even though that's the exact low, for all these candles here, which makes this a double tweezer bottom sort of thing. So anyway, had you gotten in 4x3, set your target probably high of the day, $70, maybe a little bit higher if you had just been trailing your stop. But had you gotten up into this range and you set your stop at like 5, probably would have been stopped out and or trailed out, would have gained $1 per contract, same as your risk. So that could have worked out, getting in 4x3. But had you gotten up to 7, that would have been a 3R. Had you gotten up to 8 or 9, 4 or 5R. So that's the potential there. And then if you didn't exit up here and you held through that sideways move, it did end up rallying again up into the same range. So hopefully you got out here at 8 or 9 or, somewhere on these candles. Because from there it just pulled back and likely trailed out everybody who was still holding on past this point, thinking it was gonna continue on up. So that's looking at the calls. The rest of the day was, the second half of the day was just chop. Because we got this high on the calls, and then have some pullbacks. Let's look at the puts and see what was going on here. So we had the initial rally. This is the 1650 put. After that rally, we sold off hard and put in, pretty nice base here. So this candle has less than $1 range. Could have been trading, that kind of candle, getting in, at 13 by 12 on any of these, and that would have moved our 13. No, not quite 13. That wouldn't have worked. 1350 by 1250, maybe something like that. Anyway, that would have moved up into like 16 to these highs. But then, maybe it worked once and twice. You got 2R, 4R, and then tried again here for an R, and that stopped out. So that would have been taken away an R, so you're only at 3R. And then again, happening down here is something where we got some smaller candles. These are still larger than $1, and then this also. So it would have been harder to trade this with a $100 risk unit. But the potential is there for it to continue on up on the option, but not on the stock. So let's see. This was at 1150. 1150 was when this candle was forming a nice inverted hammer, kind of an inside candle, another inside-ish candle, and then a big breakdown. So getting in bearish up here after it made a high of the day would have taken, some real focus to do that. Make sure you have the plan in place to let you trade that kind of thing. As long as it comes into a line, then, we should be good for it to, see if it's going to pivot there or not. And then in this case, this turned out to be, nice consolidation. We got the squeeze fired way over here as it was on its way back down. So it was kind of like a false breakout and then almost a false breakdown too, which just kind of tells me, okay, it's still time to wait for this to show some sort of movement. We've only touched the 5 exponential right now. We on that last rally here, we didn't even do that. We made it all the way up here before we sold off and then sideways and sold off. So let's see, we didn't do it on this one. We did it on this candle, on this rally. But we haven't really had a good rally from something being a lower low, other than, and touch the 5, sorry. That's what I'm talking about. Probably since something like this. But even this, the 5 was below the 21. This one, the 5 was above the 21, but we didn't touch the 5. So now we've touched the 5. This is much smoother as it's moved up. I guess we'll just have to wait and see what happens tomorrow. Hope you enjoyed this video. This is Justin Amazon. Thanks.